compared to other fiat currencies, right? But what's happening versus Bitcoin? Bitcoin's going up. Well, wait a second. In fact, Bitcoin is the best performing asset in the world this year. As great as, Peloton and all the crappy stocks that are recovering from being down 95% have done here in January, in a big short squeeze, Bitcoin's done better. Now, part of that is Bitcoin's gone through its own short squeeze as well,
right,
in the last week or so. But anyway, that's a long answer to say you have to think about inflation for what it is. And what we talk about in the news isn't inflation. That money isn't going to stay in stocks and bonds.
Right.
It's going into digital assets for sure.
Yeah. Yeah.
21% of millennials today own Bitcoin. 21%. And that number is 50 times higher than the average boomer,
right,
which might be 0.1, 0.2%. And I should form a support group, Boomers for Bitcoin. Right? But the reality is that number is going to go from
You heard it right. Despite the FTX scandal that hit the crypto markets a couple of months ago, Bitcoin is the best performing asset in 2023, according to Mark Yusko from Morgan Creek Capital and Morgan Creek Digital. In case you don't know Mark, he's known in the community for his thoughts about Bitcoin and blockchain technology, together with many years of investing in unique opportunities and managing billions of dollars with his company. In today's video, Mark will explain why Bitcoin will still be the best opportunity in 2023 and why every millennial and future generation will only use this as a form of money, leading to exponential adoption and price increases. This is a powerful video, so watch it until the end and share it on your social media, as there's a ton of value for everyone. If you don't know his story and why he's so bull on Bitcoin even after the recent scams, you may want to hear this.
You think about when I first started in 13, 14, we were in a bear market, and it was easy to kind of not pay attention when everybody yelled at me. And then by 17, we were in a bull market. I'm like, no, this is real. And I remember 17, we're getting the firm formed, and we launched our fund in early 18. And if you remember, prices peaked December 17 at almost 20,000, and then immediately started falling. We're like, oh, geez, great time to start a firm and a fund. And we were in the teeth of a bear market. And I remember people saying, oh, you're such an idiot. You left this great world of traditional finance. Why are you doing this? And it was really a trying time, but the conviction was there because I was focused on the tech. And there was so many greenfield opportunities to invest in infrastructure firms like Coinbase, which is a dominant company today, and Figure Technologies, which is doing amazing things in mortgages. And so it was easy for me to stay focused, even though we were in the teeth of a bear market. I remember being on CNBC. I remember the day exactly because it was December 7th. December 7th, 2018, and prices had fallen all the way to $3,200 from 20,000. I mean, down 80+% in the teeth of the bear market. And I remember the host of the show saying, are you just going to give up? And I said, no, just to the contrary. I said, we actually just issued the Morgan Creek Digital Challenge. Said we will make the Buffett-style, $1 million bet, like he did with Ted Seides on hedge funds, and I actually called Warren. Someone said if you call him after 5 o'clock, he answers his own phone. So I did, and he did, and we talked about it. And his advisors talked him out of it, but he was curious about doing it. And so I said, all right. Warren said no, but I'll challenge anyone, anywhere. $1 million charity bet. I'll take Bitcoin, and you get the S&P for the next 10 years. And we got no takers. I mean, we got crickets. And now it's a good thing, right? Because we would be crushing them.
Right.
But no one would take us up on it. And remember, that was at 3,200. So here we are today at 23,000. That's a lot higher, right? We were at 69,000 for about 11 seconds. And that was the peak of stupidity and leverage and hype. And it turns out now fraud with FTX. Now, so we're in the teeth of this bear market. We have the big correction, down 75%-ish off the peak down to 15,000. Big recovery lately, and we'll talk about that. But I will be honest, right? Over the holidays, I had a little mini existential crisis. And the FTX thing really shook me because so many people thought this guy was it, right? I mean, he was called the John D. Rockefeller of crypto, or the JP Morgan of crypto. Some people call him the Jesus Christ.
Right.
I mean, blasphemy, right?
Right.
Of crypto. They called him the Michael Jordan, which is even, not equally blasphemous, but clearly blasphemous.
All our Chicago listeners are cringing.
Look, calling him Jesus Christ was crazy. I mean, and the thing about it is he basically is a bad guy who did bad things, and he committed a massive fraud on a massive scale, and he duped a lot of people. Now, we fortunately didn't invest. Now, that's not because we're geniuses. Actually, a couple times people said, "Hey, are you interested?" And I'm like, "No, the numbers are stupid." Right? His first round, was an $8 billion funding round, or $8 billion valuation funding round. They only had 40 million in revenue. I'm like, no, that's just stupid. And then it went to 16, and then it went to $32 billion. So it's valued at $32 billion because people thought they were going to go to the moon, and they were naming stadiums and getting celebrities, but it was all an elaborate hoax.
Right.
And so when that unraveled and prices collapsed and people were throwing stones, and it was like, wait a second, did I miss something? Did I get something wrong? And I really spent a couple weeks really thinking about it. And the good news is I came to the conclusion that no, bad people do bad things. And I found some stats. Here's an interesting stat. Since the global financial crisis, there have been 583 banks that failed. Yes, one of 500, there are 500 exchanges in the world that process crypto, 500, and one of them went under. Okay.
Yeah.
So that's bad, but it's not the end of the world. And it was way worse. You mentioned it, Mt. Gox, right? When Mt. Gox went under in 2014, that was way worse.
Right.
I mean, orders of magnitude worse, because there were like a handful of places you could trade your Bitcoin. So that didn't kill the ecosystem, and the ecosystem's orders of magnitude bigger today. So I think I came away realizing that, okay, yes, there was a lot of hype, not a lot of substance. And this will sound ridiculous, but it was a $10 billion fraud.
Right.
And $10 billion is a lot of money, like a lot of money. But relative to a $1 trillion industry, it's really not that big. And that's important because the rest of the industry goes on. The builders will keep building.
And there are a couple of reasons why Bitcoin is so powerful, according to Mark, but people need to understand this on a macro level to understand why Bitcoin will explode soon.
A nuanced view on this. I actually don't think we're experiencing inflation. And people say, oh, no, of course we're experiencing inflation. Haven't you seen egg prices lately? Well,
egg prices.
The point is, the eggs didn't get better, guys. The money got worse.
Right.
So what happened is, we had I believe, the greatest policy error in the history of policy errors, and I mean in all of history, in the lockdowns in response to the COVID crisis. And that set of circumstances led to an even bigger policy error, which was the monetary policy error, to create half. Just let that number sink in for a second. Half of all the dollars that have ever existed in the history of our republic, right? So we've been a republic for 247 years now. Half of all the dollars in that 247 years were printed from 2020 to 2021. And because of that, everything appears to be rising in price, but it's really not, right? According to Zillow, right, my house that I live in here in North Carolina went up 40%. Well, my house didn't grow. It actually didn't get more efficient. It actually wore out a little bit. I had to put some money into it. It didn't get better. The money got worse. So money got devalued. There's a very big difference between inflation, 1970 style, I lived through it, where there was excess demand and limited supply, and monetary debasement, which is what we're doing right now through bad monetary policy and horrible leadership. So that's the difference. And so this number that everybody's freaking out about only went up last year because there's a 16-month lag between when you print a dollar and how that dollar gets into the economy and gets measured by CPI. So most of the things that made up the high CPI number are now going away. And interestingly, money supply growth has totally reversed for the first time in 60 years, right? I'm going to turn 60 this year. So the first time since I was born, money supply growth went negative. And that negative is going to show up in the CPI number 16 months out. By the end of this year, inflation will be sub 2%. The CPI will be sub 2%. We won't be talking about inflation. We'll be talking about deflation again. And we're going to withdraw $1 trillion from equity markets, and that money's going to go into bonds. So it's going to put pressure on interest rates for the long term, and it's going to put pressure on inflation because inflation roughly matches working age population growth, which is sub 1%, and productivity, which is sub 1%. So that's where we're headed. And we won't be talking about inflation, but what's going to have to change, and this is the big reason that you've seen such pressure on Bitcoin, gold, et cetera, is monetary policy last year was negative, right? The Fed raised rates, they withdrew liquidity, they did QT instead of QE, quantitative tightening, and that caused the dollar to rise. Through October, the dollar went up 18%, and that exacerbated the problem. Because remember, Bitcoin, gold, it's an interesting thing, right? Gold, we don't price gold in gold. We should, right? Because an ounce of gold has been a perfect store of value for 5,000 years, right? 1 ounce has bought a fine person's suit for 5,000 years, from Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. You take 1 ounce of gold, you get a fine person's suit.
Right.
So that's a perfect store of value. Now, Bitcoin is, I think, the future store of value because it's digital gold. It has all the properties of gold: scarcity, durability, but it's more portable, right? I can send you one. If I had a brick of gold here and I tried to break it into 3 pieces, it would be really hard to do. And even if I could do it, which I can't, I couldn't stuff it in my computer and send it to you. I can send you 1/3 of a Bitcoin in a heartbeat using my cell phone. So it's a better form of gold. And I think it will be digital gold for the foreseeable future. But we don't price gold in gold, we price it in dollars.
And check out these astonishing facts when people say stocks are a better opportunity than Bitcoin.
Stocks have been awesome. Stocks are great. Really. Well, stocks made nominal highs a year ago, and then they went down a lot last year, and they looked good the first couple weeks of January. But that's because we price it in dollars.
Right.
Price it in a devaluing asset. Well, what if we priced it in gold? Stocks have been dead flat since 1996.
That's a
since
good
I
point.
made that investment in Google, right? Dead flat, priced in gold. What if we priced it in Bitcoin? Since Bitcoin was started in 2009, it's like pennies on the dollar.
Right.
Bitcoin's up, and again, one Bitcoin's one Bitcoin. Bitcoin doesn't go up, it doesn't get better, it doesn't get more efficient. It just exists, but it's priced in other currencies. So here's an interesting fact. There has never been a bear market in Bitcoin in Turkey.
Right.
Priced in Turkish lira. The price only goes up. How about Venezuelan bolivars? Price only goes up. How about in Argentinian pesos? Price of Bitcoin only goes up. There's only been a bear market in Bitcoin where there's fluctuation relative to the base currency, the dollar, the euro, the yen. And so since October, what happened? Right. Since October, DXY has rolled over and has gone straight down. The dollar is crashing compared to other fiat currencies, right? But what's happening for us to Bitcoin? Bitcoin's going up. Well, wait a second. In fact, Bitcoin is the best performing asset in the world this year. As great as, Peloton and all the crappy stocks that are recovering from being down 95% have done here in January. In a big short squeeze, Bitcoin's done better. Now, part of that is Bitcoin's gone through its own short squeeze as well in the last week or so. But anyway, that's a long answer to say you have to think about inflation for what it is. And what we talk about in the news isn't inflation, it's currency devaluation.
And when people compare gold to Bitcoin, this is probably one of the best explanations out there on why everyone must get Bitcoin now and get ready for what's coming.
So if you think about gold should have risen about 100% since 2020. Now, it hasn't been quite that. It went from 1,100 to about 1,900, so it came close. Bitcoin went up almost exactly 100%, as it should have, right? If you devalue the currency by 50%, the commodity that you price in dollars should go up by about 100%, just 1 over 0.5. And so that's about what happens.
You said that you are kind of expecting a decade of major deflation due to things like population and other circumstances. But, from my understanding of the Federal Reserve and how our monetary system works, and even the government, on a fiscal side, won't these deflationary pressures encourage them to print way more money to fight the deflation than we saw in COVID?
100%. That's exactly why I'm so convicted about the upside for Bitcoin. Gold is fine.
Yeah.
Gold is fine. And gold has something that Bitcoin doesn't, right? Gold, a physical coin or a physical bar, earrings, candlestick, chalice, whatever it is, can be possessed, physically possessed. And we've all heard the stories of people who got out of Nazi Germany because they had gold and they could give it to the guards to bribe them to get out. So in total Mad Max kind of crazy, gold has that one advantage. Now, that one advantage I don't believe is enough to make it more preferred than Bitcoin as a pure store of value, because gold, the amount of gold that's mined every year roughly equals the amount that's lost or stolen. So the stock, the amount of gold above ground in the world relative to the flow is a high number, right? Okay. The higher the number, the more scarce the asset. So, collectible Porsches have the highest stock to flow because what happens is what's called the dentist wrap, right? The dentist buys the Porsche, doesn't know how to drive it, drives it around a curve, accelerates and wraps it around a tree. So no more Porsche. And so the ones that survive, Jerry Seinfeld and John Shirley, the guy from Microsoft, bid against each other to buy them and put them in a garage. So collectible Porsche have actually been the best performing asset over the last 20 years because they're very, very scarce. And the more scarce something is, the more valuable it is. So Bitcoin has the same stock to flow ratio as gold. There's very little new Bitcoin created relative to its stock, and that amount that's getting created every year diminishes every year for the next 140 years. And we have a schedule. And so that scarcity, coupled with the fact that it's more divisible and more portable. As I said earlier, if I had a bar of gold, I couldn't break it because I'm not strong enough. But even if I could, I couldn't stuff it in the computer and send it to y'all. So Bitcoin has an advantage over gold. But here's the real thing. If I ask anyone, in fact, if I asked people who are listening to the show, if I asked anyone over the age of 35, who's your broker? I don't know, UBS, Merrill Lynch, whatever. How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, are you kidding me? It's a Ponzi scheme. 0. Haven't you heard that Peter Schiff guy? How often do you use DeFi? What's DeFi? Okay, if I ask anyone under 35, who's your broker? What's a broker? You mean Robinhood? I have a Robinhood account. How much gold do you have? Oh, 0. Boomer rocks? Are you kidding me? Haven't you heard that Peter Schiff guy? How much Bitcoin do you have? I don't want to talk about it. Why not? It's a really big percentage of my net worth. I'm kind of embarrassed. How often do you use DeFi? Every day.
To close this fantastic interview with Mark Yusko, pay attention to these numbers.
21% of millennials today own Bitcoin. 21%. And that number is, 50 times higher than the average boomer, which might be 0.1, 0.2%. And I should form a support group, Boomers for Bitcoin. Right? But the reality is that number is going to go from 21 to 100. And the I think they call them, they're not the Gen, what comes after?
Gen Z?
The Gen A, the Gen Alphas.
Oh, Alpha. Yeah, Gen Alpha.
Yeah, Gen Alpha. So the Gen A's are like I said, they're going to be fully digital, and that's a pretty cool thing. So ultimately, what's exciting about Bitcoin is it's a perfect form of money.
Right.
And what do I mean by that? I mean, it is durable, right? It's long lived. It's fungible, meaning it can move around and interact in lots of different ways. It is divisible, it's portable, and it's backed by math, not by trust.
30 seconds.
So the great thing is we're replacing trust with truth. For 800 years, we've relied on trust. Banks we trust, insurance companies we trust, brokerage firms we trust. We don't have to trust anybody anymore. We'll have truth. We'll have a digital record on a ledger that will be ultimate truth, and that's what Bitcoin is.
Did you enjoy this video? Let us know your thoughts in the comments below, and please leave a like and subscribe for more content like this. Thank you so much for watching.